what would you have to say to people about reverse mortgages?
Our philosophy here is that you have to be 62 years old. One of the borrowers has to be 62 to have a reverse mortgage. So our goal here is education. So we have a reverse mortgage specialist. And so whenever somebody that's over age 62 comes to us, we make sure they're aware of that option. We're not here to sell you on one option or the other, but we're more about education.
Right.
And that product has improved immeasurably over the last few years. In retirement, none of us know how long we're going to live. So how do you prepare yourself for something? You don't know if your money's going to run out. We've done reverse mortgage loans for people that are 101 years old, okay? You don't know how long you're going to live.
Right.
And so you have to make sure that when you're headed into retirement, you are set up for the best possibility of success possible. And that truly, in my opinion, is also leveraging a reverse mortgage.
Sure.
Because who in their retirement years needs to be making a mortgage payment, right? You shouldn't be. And because if you're going to be making a mortgage payment, you're going to be drawing down on your assets that you have, maybe your IRA or your 401k. You're going to be drawing that down to make that mortgage payment. Well, that makes no sense at all. Keep that money liquid so that it can keep working for you and you can invest that money,
right,
and let your house make the payment. Why do we have in this industry or in this world that, I always have to have a free and clear house? So maybe I've got a free and clear house over here, but I've spent down my entire retirement savings over here.
Right.
At the end of the day, that can't go to the grocery store. You can't go to, to buy things or to go on trips, whatever that you need as you go through retirement.
Well, I think the other thing is that people think, well, I can only do that if I completely own my house outright, and that's not necessarily the case. I mean, you could have a $300,000 home or whatever, the value of the home, and you still owe, $100,000 on that home, but you could still do a reverse mortgage based on the equity of that $200,000.
Oh, absolutely.
And I think that's the message that sometimes people need to know, that how do they make their asset potentially liquid if they want to?
Well, two things I want to touch on. One is the ability that I was not aware of before I started studying the product, but you can set up a reverse mortgage line of credit and not advance anything on it. Okay, so you can set up, it's just like a HELOC. Okay,
yeah.
So if I have a free and clear house, I can have a HELOC, and my loan to value is based on my age. So the older I am, the bigger my reverse HELOC I can set up. Okay,
right.
That line of credit grows by your interest rate every year. So your available line of credit, so let's say you have a $100,000 line of credit, and let's say you have a 5% interest rate. The next year, your line of credit available line is $105,000.
Right.
So it's kind of a reverse thing. You actually want a higher rate in a reverse mortgage because your available line of credit can grow. Now, you only ever owe what you owe on your house. So if you've never advanced anything on that, then that's fine. Your heirs, you pass away, they get all the equity in that house.
Right.
However, if things are difficult, things
you
are
pull
challenging.
$50,000 out hypothetically of that $100,000.
You can do that anytime. You don't have to go to a bank to find that out. So
right.
if something comes out, you need a furnace fixed on your house, something like that, you can advance on that line of credit and you don't have a payment against it.
What a great peace of mind for people to have if they, because I think that's one of the major concerns that people have is,
what do I do in retirement? And when I need access to my equity in my house,
right,
I don't want to get a regular home equity line of credit because that has a payment on it. And let's not forget, last time in the recession that we had in 2008, the Great Recession, banks were calling their HELOCs due. Okay, you don't want to be in that position when you're in retirement.
No.
A home equity line of credit with a reverse is set up until your age 150. Nobody can call that loan due. As long as you pay your taxes and your insurance, nobody can tell you that you have to move out of it.
So when I turn 150, then I have to pay that back?
Then you would have to pay that back.
All right, well,
okay.
I guess I'll have to plan for that. My balloon payment that I have to make when I turn 150 years old.
And a lot of people aren't aware that there's something called a reverse purchase mortgage. So again, that, in my opinion, is one of the greatest tools. It came out about 4 years ago, and I love that product because it's, like, for anybody over age 62, yes, I can get a mortgage. I can also do a reverse purchase mortgage, and I can still make payments on that reverse purchase mortgage. So again, let's say I'm buying a $200,000 house and I have a reverse mortgage for $100,000. Okay.
Yep.
You can make payments on that $100,000 mortgage, and the rates aren't that bad right now. So you can make payments on it, but the benefit it gives you is maybe something happens in the future where you can't afford to make those payments anymore.
Right.
Stop making the payment if a reverse mortgage. Nobody cares.
Yeah.
As long as you pay your tax insurance, you're fine. Okay? Over here, if you had a regular mortgage, you still have to make that payment or you're going to get foreclosed upon. So again, the thought is it just gives you more options in retirement versus, and so we've got to get out of that mindset that I've got to have a free and clear paid house, and then we got to look at all of our assets equally, not just our house as being free and clear. That has to be on the same level footing as our other assets, like our IRAs. And we look at all of them together and what is the best way so that we can be successful with our retirement. And so that's what the reverse mortgage gives you. I will be doing it when I'm age 62. I am firmly convinced of it. If it's still available at that time, it's definitely a tool to help you in retirement.
And you have credentials in reference to the lending that you've been accredited to. You were telling me about that, and I was just curious in reference to your credentials.
My wife tells me that, she says that you should have been a college professor. So what I like to do is I like to take education courses. So certified reverse mortgage planner, certified mortgage planner, certified divorce lending specialist, and a certified military lending specialist. So whatever designations you can get out there, I go for that and I learn about it and I get that. Because I want to offer education to my clients.
Yeah, no, and that's where I'll circle back to when we started this, is that I know that my clients that I've sent to you and have always considered you a wonderful resource to answer the questions. And sometimes it's not even about doing something, sometimes it's just about getting an answer to some of their questions, so that way if they decide to act, they can.
Right, absolutely. So, it's about education, about knowing. Because you go through a mortgage process maybe every 7 to 10 years. You need somebody to help you with that process.
Right,
so,
right. Well, Dave, thank you so much for taking the time today to talk about this. We're hoping to be able to put some of this out on our YouTube channel, and we'll have some of the links about how to be able to contact you and your team, and some website links, that sort of thing. So
absolutely. Always a pleasure working with you, Tony.
Yeah, you also. Thank you, Dave.
All right. Air fist bump.
Yeah, boom. Yeah, thank you.